Hey guys, so I wanted to do something a little bit different. I think I might actually skip the stock market overview today. So what I wanted to talk about was just fluctuations in stocks like Apple or the S&P 500. But in this specific example, I'm going to show you Apple. So today, Apple actually fell about 4% or so from the previous close to the actual low of the day. And then you can see right here that we actually ended the day negative at 2.72%. So what I want to show you is kind of like a short-term options trade strategy for swinging Apple. So I'm going to show you some statistics. So I actually got a data dump of Apple, and this is all the way from April 1st, 2020. So this column right here is going to be the difference from the previous close to the low of the current price action. So you can see I highlighted everything that was over 3% to the downside. So let's just take a look at some of this data. You can see here that on the 17th of 2020, we fell 3.43%. But where did we close? We actually closed just 1.36% to the downside. So from the actual low to the close, we rebounded about 2%. And then you can see right here on the 21st of April 2020, we fell 4.15%, and then we rebounded about 1% for the close. But then also look here, the next day, you see about a 3% rally. So it basically undid most of this move. Now let's go down a little bit further. Now on the 15th of May 2020, we fell 3% from the low, and then we regained about 2.5%, and then we just closed negative 0.59%. So what I'm trying to get at here is that if you're buying Apple around 3% from the previous close, then chances are that you're probably getting a good deal, and there's not as much more risk to the downside. So I do want to provide you guys with a little bit more examples. So we're just going to keep going down this list. So here on May the 11th, or actually that's not May, that's June. On June the 11th of 2020, we fell about 5%, and then we ended around 5%. And then if you look right here, we have 3 green days after that. Now you look right here, fell 3.24%. This was the 26th of June. And then we closed 3.07%. We had a 2.3% up day the next day, followed by a 0.83%. Now, right here, this is July the 23rd of 2020. You can see down here, we fell a lot. From the low, from the previous close to the low, this was like 5.4%. And then we just regained about 1% on the close. And then you can see right here you may have been tempted to sell because we fell again the next day. But then had you waited, you would have seen this 2.3% up day. And if we accumulate these 2 days together, that's like negative 4.8%. So, we would have regained half of that. So had you bought in the 3% down area, you still would have had a gain. And then if you miss that, then yeah, you'll see that negative 0.64% the next day, followed by this crazy move right here. Now you can see there's a 10% gain. day. That's just crazy. That's insane. So right here on the 8-7 2020, we see a 3.17% move to the downside from the previous close to the low. And then you see that we actually close about 0.6-ish% higher. And then the very following day, we have a 1.45%. So you could have just taken profits real quick and just kind of like scalped it almost. And then here we basically have almost another 3% down day. And then it's followed by a 3.32% up day and another 1.77% up day. So that would have made for a very quick swing. Now here's where it gets a little bit ugly. Now, had you been buying here, you would have seriously got screwed. Now, let me just put this into context. This period right here was when Apple did a stock split, and when basically Tesla and Apple both did the stock split, and it actually caused pretty crazy correction in the markets just because everything rallied so hard. So I think that was this right here when they announced that stock split. You know, you got this 10% green day, and then you got like another 5% green day, 2% green day, 3% green day, 4% green day. Now, this makes sense that we're going to tank because we had so many consecutive green days. So, this strategy, I wouldn't use this strategy if we had some crazy green days in like a month prior. So, use this strategy preferably when we are going down and you see more of these, like 3% down days. You don't want to be doing this when earlier, like a few weeks earlier, we had a 10% green day, you know? Because that move is essentially going to get it's going to get absorbed by the market as time passes. So I mean, just these 2 days, this one, let's see, this one, and that one, in just a 1 month period, basically the Apple stock went up like a crazy amount. If you're just looking at these um, 5 instances, so had you been buying calls when you saw that first 5% down there, that could have been a big mistake. So you want to look out for things like this. Now you see here, we have a 4% down there from the low, previous close to the low. We rebound a little bit, and then the next day we basically just undo this entire move. And here's another instance. We have about a 4% down day, and then we recover about 1.3%. So not a very big move back. But had you been buying at around 3%, well, you still had a tiny gain. So it's not like you really lost anything. And in here we see an almost 5% down day. We rebound almost nothing. So at this point, you might be scared. Like, do I hold this? And then, you know, it might be an okay move to hold this because if we look prior, we had a lot of down days prior to this. So, you know, I would have felt comfortable just holding it to the next day. And then the next day, you see a 3.71% rebound. So, yeah, you would have profited again. Here we have this really nasty 6.6% down day. And then it actually just closed slightly back. So this is just like a 1% move back to the upside from the lows. So yeah, you probably would have said, "Oh, I started buying here at 3%. I'm screwed." Maybe you averaged down a little bit, and you know you got something like 4.5%. Well, you look at the prior days, and you see, hey, we've had quite a bit of selling. You know, we had this 4% down day, we had this 3.7% up day, but before that, we were selling even more. So you know what? Maybe I might want to hold on to this a little bit longer. And then you see these gains, you know, like 4%. It's 1.54%. It's 3.55%. So basically, you kind of get the point here, right? When Apple is under 3%, or I guess over 3% to the downside, that might not be a bad idea to pick up some shorter term calls. And I'm not saying like one day, maybe like 2 weeks out or something. And just give yourself a few days, see how things play out. And then, the chances that you're not going to gain and you're just going to lose are probably a little bit lower. So I'm not saying that it's totally like this is a for sure guarantee thing that you're going to make money. But what I'm trying to say is that statistically, as I've shown, there's fewer chances that you do lose money doing this because you're already buying from a pretty low standpoint. How much lower do you think it could get is kind of like the question that you got to ask. And when you're doing this, I mean, please look at the prior days and see, have we been going down? And then now we just have this sharp downtrend move, or have we been going up? And all of a sudden we have this down move, because those two scenarios are definitely going to play out differently. So I'm just going to scroll down a little bit more and get closer to our more recent price action. So let me just go back a few weeks. Now you can see here we have this 3% down day, and then we rebound about 1.2%. So you could have just taken profits right there and just called it a scalp. And then the next day we actually fall a little bit more. And then here, you saw 5.4% down. But then look, we had these massive days where we just sold off, sold off, sold off, sold off. Maybe it would have been a good idea to buy that call. And if you bought that call when you were 3% down from the previous close to the low, well, then you would have got like almost a 4.67% return, which is pretty amazing. So right here today, we actually made a low of about 4.3%, and then we regained a pretty good amount. We regained about, what is that, like 1.5%. So who knows what tomorrow is going to bring. But let's say tomorrow we sell off again, and let's say like tomorrow is like another 5% down day, maybe that might be a really good buy for Apple because, we had this previous sell off of 2.72%. So that's my video on Apple, and I hope this helps you guys.